Read question number 45 yourself. Question number 45 is from study material, and similar question was in RTP 2021. X Limited is considering its new project with the following details. Initial capital cost 400 crore, annual sales unit 5 crore, selling price per unit 100 rupees, variable cost per unit is 50 rupees, fixed cost per year 50 crore, discount rate 6%. These are the basic details. Then they are asking you compute the NPV of the project. Very easy. Compute the impact on the project's NPV considering a 2.5% adverse variance in each variable. Which variable is having maximum effect? Consider the life of the project is 3 years. So what do you mean by that? It means that this time sensitivity will be done by changing the variable by 2.5% adversely. Adversely means in case of capital cost. In case of capital cost, it will increase by 2.5%. In case of sales quantity, it may decrease by 2.5%. Selling price may decrease, variable cost may increase, fixed cost may increase, and discount rate may increase. So if these variables change adversely like this, how will your answer change? Okay. Number of years we are going to keep constant 3 years. So let us solve. First thing first, original question in front of you, calculation of net cash inflow per year. Calculation of net cash inflow per year. Please write calculation of net cash inflow per year. Under that write down A. Selling price per unit is given 100 rupees. Very simple school level question. Selling price 100 rupees. Variable cost is given how much? 50 rupees. Contribution per unit. Contribution per unit 50 rupees. Contribution 50 rupees. Number of units sold per year. Number of units sold per year 5 crore. So can I compute total contribution C into D? Total contribution C into D is 250 crore. Less fixed cost per year. Less fixed cost per year. Less fixed cost per year. How much is that fixed cost per year? 50 crore. Fixed cost per year 50 crore. Therefore, net cash inflow per year. Therefore, net cash inflow per year. Therefore, net cash inflow per year. Anybody, net cash inflow per year would be how much? Net cash flow per year will be 200 crores. So based on original data, my annual cash inflow is 200 crore. Now write down calculation of NPV of the project. Calculation of NPV of the project, and life of the project is 3 years, discount rate is 6%, initial investment is 400 crore. So write down please year 0, cash flow, second column write cash flow column, rupees in crore, cash flow rupees in crore. Very good, Divya. So cash flow is 400, and then your initial inflow, your annual inflow is 200. Annual inflow is 200. Write down the factor at 6%. Write down the factor at 6%. Now my job is done. You will compute NPV and tell me the NPV. Multiply and take the total. Multiply and take the total. Please respond. What is the NPV? What is the NPV? Yes, please come on. What is the NPV? NPV, please. One student has replied 134.6 is right. Okay. So this is my NPV of the original question. There is a note, write down, note write down. NPV represents the most likely outcome. NPV represents the most likely outcomes and not the actual outcome, and not the actual outcome, and not the actual outcome. The actual outcome may be lower or higher than expected outcome. The actual outcome may be lower or higher than the expected outcome, may be lower or higher than the expected outcome. Now we have to do sensitivity testing by changing variables adversely by 2.5%. Adversely means in case of initial capital cost, it may increase. In case of sales quantity, it may decrease. In case of selling price, it can decrease. In case of variable cost, it can increase. In case of fixed cost, it can increase. So if the variables changes adversely, how my NPV will be affected, and which of these is going to affect NPV more, right? So you have to write in the notebook so that you can practice. Practice is very important for exam. Reading the answer will not help you. Solving it will help you. Sensitivity analysis considering 2.5% adverse variance in each variable. Considering 2.5% adverse variance in each variable. Considering 2.5% adverse variance in each variable. Draw this table first. Take a scale, pencil, draw the table first. You have to learn to solve it nicely in the exam. Similar questions have been asked in past exams. Serial number, particulars, base. Base means my original data which I have computed just now. Then there are 5 columns. Initial capital cost increased to 410 crore. Sir, why 410? Why 410? Take 400 on your calculator. 400 plus 2.5%. So you will get 410. Next column, selling price per unit. Right now it is 100. 100 minus 2.5, 97.5. Next column, variable cost per unit increased to, right now it is 50. 50 plus 2.5%. 50 plus 2.5%, 51.25. Next fixed cost, again 50 crore plus 2.5%, that is 51.25 crore. Unit sold. Unit sold is how much? 5 crore minus 5 minus 2.5%, 4.875 crore units. 4.875 crore units. If you have drawn the format, please inform me. Then I will proceed further. Have you drawn the format? Have you drawn the format? Say yes. Once you say yes, we'll go ahead. Yes, very good. Start. Point number A. And then you write down rupees, rupees, rupees. Selling price per unit. Point number A. Selling price per unit. All of you must write, only one column will change. This column will change. 97.5 will only change one variable at a time. Other variable will be taken from original question. Then we'll take variable cost per unit. Base is 50. Base is 50. Initial capital cost, all columns will be 50 rupees. Only this column will change. 51.25. 51.25. Other column variable cost per unit in rupees will be 50. And therefore contribution per unit. Therefore contribution per unit A minus B. Contribution per unit A minus B. 50, 50, 47.50, 48.75, 50, 50. Now you write down rupees in crores. Remaining data is rupees in crore. Remaining data is rupees in crore. Write down number of units sold per year. Number of units sold per year in bracket units in crore. In bracket units in crore. Again be careful. Original question is 5. 5, 5, 5, 5, 5. But last column we are going to make it 4.875. 4.875. Number of units sold, if it changes to 4.875, what will happen to NPV? Total contribution, write down. Total contribution C into D. Total contribution C into D. Please multiply C into D. 250, 250, the third one will be different. 237.5, 243.75, 250. The last one will also be different, 243.75. So if the variables change one at a time, this is my contribution. Next is fixed cost per unit. Again, original question is 50 crore. 50, 50, 50. Now it will change. In this column, we are going to change fixed cost and write 50. Write 50. Then write down net cash inflow per year. Net cash inflow per year 200, 200, 187.50, 193.75, 198.75 and 193.75. Up to this is right. Now write down PV of net cash inflow per year. PV of net cash inflow will be column number G or line number G multiplied by annuity factor of 2.673. Now how did you get annuity factor? 1 divided by 1.06 equal to memory plus equal to memory plus equal to memory plus memory recall. 2.673 is the annuity factor. Okay, please, now I will tell you how to get it fast. First you type 2.673 multiplied by 200. You will get 534.60. Now you just type 200. Anyway, don't type, it is same. Now just type this number, press equal to. Just type this number and press equal to. you will get 501.19. Type this number, press equal to. Type this number, press equal to. Type this number, press equal to. This way you can do it fast. When you have to multiply by the same number, in the first calculation, use that number first into other number. Initial capital cost, here it will change. Here in this column, capital cost will change. 410, other columns will be 400. Next is NPV, H minus I, NPV, 134.60, 124.60, 101.19, 117.89, 131.26, 117.89. So this will be my NPVs. If capital cost changes, 124.60. If selling price decreases, NP will be this amount. If variable cost increases, NP will be this amount. If fixed cost increases, NP will be this amount. And if quantity sold decreases, NP will be this amount. My original NPV is 134.60. So you have to compute percentage change. This number you will take in the base denominator, calculate the difference between these two, divide by 134.60. So your calculation will be 134.60 minus 124.60 divided by 134.60. Please give me the answer now. Will it be negative 7.43% because it has gone down, minus sign. Next one will be, you write like this, 101.19 minus 134.6 divided by 134.6. On your calculator you can do it, 24.82. Next one, compare these two, divide by 134.60, 12.41. Now compare this and this, divide by 134.60, minus 2.48. Last one, minus 12.41%. Just confirm whether these calculations are right. Just confirm whether these calculations are right or not. Is it right? Please say yes. Okay. Which is having maximum impact on NPV? This one. Can you see that? 2.5% change in selling price will reduce NPV by 24.82%. So the question was, which variable is having the maximum effect? So you will say selling price will have maximum effect. Write down the answer now. Note. Write note. The above table shows that by changing one variable at a time, by 2.5%, while keeping the others constant, the impact in percentage terms, on NPV of the project can be calculated. The impact in percentage terms on the NPV of the project can be calculated. Next, write down, thus the change in selling price has the maximum effect on the NPV by 24.82%. Change in selling price has maximum effect. Can you see that in the table? This was a very easy question. If you know how to solve it, then you can get full marks. One homework, write down below. Homework, also calculate NPV and percentage change in NPV, which they have not tested in the institute answer, if discount rate increases by 2.5%. That also should have been tested. Okay, that also should have been tested. So in the exam, if you want, you can add one more column and you can take a higher discount rate. That is my opinion, because discount rate is also a variable, and if it increases, NPV can decrease. Now we'll go to next question, number 46. This question number 46 has been asked in study material MTP 2018, RTP, and November 18 exam 5 marks, November 18 exam 5 marks. 2 times why we have written. November 18 exam 5 marks. Why this question is important? Let us see. From the following details relating to a project, analyze the sensitivity of the project to changes in initial project cost, annual cash flow, and cost of the project. Initial project cost is given, annual cash flow is given, life 4-year, cost of capital 10%. Identify which of the 3 factors the project is most sensitive if the variable is adversely affected by 10%. Which of the 3 factors? Which 3 factors we are going to take? We are going to take initial project cost, annual cash flow, and the cost of capital. We will keep the life of the project 4 years constant. Other 3 variables we will check. If they change by 10%, like the previous question, how much will the NPV change? But what is the percentage change in NPV? And the project is most sensitive to which variable? Project is most sensitive to which variable? And to help you, they have given you annuity factor at 10%, annuity factor at 11%. This annuity factor at 11% will be required if you want to increase the cost of capital by 10%. Okay. So initial project can go up by 10%. It will become 1,32,000. Annual cash flow can reduce by 10%. If annual cash flow reduces by 10%, it will become 40,500, and cost of capital, if it increases by 10%, will take 11, not 20. Don't take 10 plus 10. Take 10 plus 10% of 10, 11. So with the revised data, calculate change in NPV, percentage change in NPV, and project is sensitive to which variable maximum. We will see. First we will compute NPV of the original question, NPV based on original data, NPV based on this data. You have an initial project cost, annual cash flow, life, and cost of capital. Using this data, first we'll compute NPV, then we will compare change in NPV. So write down in the notebook, step 1, practice in notebook, calculation of NPV through sensitivity analysis. Writing in notebook in your own handwriting is more important than just reading the answer. If you write it, you will remember it, understand it for a longer period. First point A, PV of cash inflow 45,000, factor is given in the problem 3.169, so that comes to 142,605. Point B, less initial project cost 1,20,000, less initial project cost 1,20,000. Therefore NPV 22,605. Therefore NPV is 22,605. So this is my base NPV, and we have to check the change from base NPV. Now write down step 2. Step 2, sensitivity analysis. Draw three columns. Situation, NPV, change in NPV in percentage. Change in NPV in percentage. So first we'll write base NPV, already calculated. In bracket step 1, 22,605. Now write down point B, if initial project cost increases by 10%. If initial project cost increases by 10%, that is, it becomes 1,32,000. And in bracket write the calculation, 1,20,000 into 1.10, 10% increase. So what will be the NPV now? The NPV now will be 1,42,605, we have already calculated. That will not change. Minus 1,32,000. Minus 1,32,000. So therefore the answer is 10,605. 10,605. This is my base NPV. This is new NPV. Can you please convert into percentage? By what percentage NPV will decline? Yes, come on, reply. By what percentage NPV will decline? Answer 10,605 minus 22,605 divide by 22,605, and that is equal to 53.08%, negative. NP will decrease by 53.08%. Next, point number C, write down. Point number C, if annual cash flow decreases by 10%, that is, it becomes 40,500. It becomes 40,500. Why? In bracket 45,000 into 0.9, or you can say minus 10%, 45,000 minus 10%. So anybody answer please? The NPV will have to change. Now it will be 40,500 into factor minus initial project cost, original one. Only one variable will be changed at a time. Only one variable will change at a time. 8345. Compute percentage. Compute percentage. Answer please. Compute percentage. Your answer will be, just check, minus 63.08. Minus 63.08%. Minus 63.08%. Now write down next one. If cost of capital increase by 10%, that is it becomes 11%. Why 11%? 10 plus 10% of 10. 10 plus 10% of 10. So my discounting factor will be now 11%, and the present value factor given in the question at 11%, 3.103. 45,000 into 3.103 minus 1,20,000 minus 1,20,000. Check the answer. 19,635. 19,635. Compare now 19,635 minus 22,605. Divide by 22,605. Divide by 22,605. Reply now. The answer will be minus 13.14%. Minus 13.14%. So these are the impact on NPV for a 10% adverse change in the main variables. The project is most sensitive to which variable? The project is most sensitive to annual cash inflow, because there the impact on NPV is maximum for a 10% adverse change. So you write the conclusion. Write the conclusion. Project is most sensitive to annual cash inflow. 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 That was the answer of this simple question for 5 marks. Any query on this now? Any student, any query on this? No queries? Can we go to the next very important question for 10 marks now? This question is for 10 marks. You can mark it as very to the power 2 important. Very important. Is it right? May 2020 MTP 10 marks. And this is a little lengthy problem also. So all of you will please write down in the notebook little fast, and also keep the calculator ready. This question can be asked in your exam also for 8 to 10 marks. If you have done practice well in advance, you can do it easily in the exam. Otherwise, exam will become a trial and error ground. Trial and error is very expensive at this stage of your career. Question is, A&R Limited has undertaken a project which has an initial investment of 2000 lakhs in plant and machinery and 800 lakhs for working capital. So my initial investment would be 2800 lakhs. The plant and machinery would have a salvage value of 474.61 lakh at the end of the 5th year. So salvage value is also given. That we'll consider in the last year. The plant and machinery would depreciate at the rate of 25% per annum on WDV basis. So this time your life is little more miserable because you have to apply WDV method. The other details of the project are as follows. Sales quantity 10 lakh unit. Selling price 500 rupees. Variable cost 50% of the selling price. So please tell me what will be variable cost today. Anybody? Variable cost today? 250 is right. So variable cost is 250. Fixed overhead underline excluding depreciation 300 lakhs per annum. Tax rate is also given 35%. Rate of interest on bank loan 12%. After tax required rate of return 15%. 15% is my cost of capital. And we are going to use cost of capital as a discount rate. What is the use of rate of interest on bank loan? No use, because capital budgeting is evaluated using cost of capital. Capital budgeting is evaluated using cost of capital. So interest rate is not required. It is given to confuse you. Please mark it here, not required. The capital budgeting is evaluated using cost of capital. Question is, compute NPV of the project, determine the viability, determine the sensitivity of the project NPV under each of the following condition. First is, if selling price decrease by 10%, this is 500 right now. If it decreases by 10%, what will be the NPV and percentage change in NPV? And second is increase in cost of plant and machinery by 10%. Your plant and machinery here is 2000. So that will increase by 10%. So it will become 2200. But because of this, depreciation will also change. So I have to recalculate depreciation also in this fourth part. And to help you, PV factor at 12% is given, right? Not required. 15% will be required. 15% will be required, 12% will not be required. So we have to solve this question 3 times. First, this original question. Second, selling price reduces by 10%. Third, plant and machinery cost increases by 10%. And there is taxation also, depreciation also. So therefore, question is lengthy. Please practice in the notebook. Start. Step 1. Calculation of depreciation. Method WDV. Based on original cost of 2000, based on original cost of 2000 lakhs, based on original cost of 2000 lakhs, because I have to prepare one more table for depreciation later when the cost of plant and machinery will increase. So are you ready for this amazing question? Are you ready for this amazing question? Yes. Draw the table with 5 columns on the right side. Year 1, year 2, year 3, year 4, year 5. And when method of depreciation is WDV, you will have to prepare a tabular format. Opening balance, depreciation at 25%, closing WDV. Opening balance is 2000. Start with 2000. Depreciation at 25%, 500. Therefore, closing balance 1500. Closing balance 1500. Next, opening balance 1500, depreciation 375, closing balance 1125. Next is 1125 into 25%, 281.25, closing balance 843.75, 843.75, 210.94, 632.81, 632.81. Next column 632.81, 158.20, and your closing balance is also same as salvage value given in the problem, second line of the question. Okay, so if salvage value and book value, if sale value and book value are same, no capital gain will arise on sale. No capital gain will arise on sale because sale value and book value after 5 years are equal. Sale value and block of asset value are equal. Capital gain will not arise. Now write down calculation of NPV. Calculation of NPV. This is my original data. Write down based on original data. Based on original data. Right hand side 5 columns. Draw the table first. Preferably use a scale. Okay. Now start. Sales volume in lakhs, write down. Sales quantity in lakhs. 10, 10, 10, 10. Contribution per unit. Contribution per unit in the original question. Selling price is 500, variable cost is 50%. So can I say 500 minus 50%, 250? Do you agree with this 250? Total contribution in bracket rupees in lakhs. Total contribution rupees in lakhs. 2500, 2500, 5 times. Up to this any query? Less fixed overhead. Less fixed overhead, that is also given 300, 300, 5 times. This is excluding depreciation. Now write down profit before depreciation and tax. PBDT. PBDT means profit before depreciation and tax. Profit before depreciation and tax. 2200, same. So up to PBDT no problem. Now we'll go to less depreciation. Less depreciation rupees in lakhs. Go to step 1, previous step. Previous step depreciation, second line, to 500, 375, 281.25, 210.94, 158.20. Okay, then write down PBT, profit before tax, E minus F, E minus F, come on student, 2200 minus 500, 1700, 1825, 1918.50, 1918.75, 1989.06, please check. And if there is difference, please tell me whether there is difference. 2041.80, is it right? Confirm this, because if it is wrong, my tax will be wrong, my PAT will be wrong. So this is right. Student has confirmed. Come on, tax 35%. How do I do it? I'll tell you one shortcut. First you type 0.35 into 1700. 595. Now you just type this number, press equal to, see the magic, you will get 638.75. 638.75. Next one, type the number PBT and press equal to. 671.56, 696.17, 714.63. Is this right? Is the tax calculation right? Then write PAT. PAT is G minus H. PAT is G minus H. Please try G minus H. First one 1105. Very good. Go ahead. Next one. 1186.25. Next one 1247.19. Next one 1292.89. Next one 1327.17. Yes, please confirm if it is right. Then I'll go to the next line. Very basic question if you solve one by one. Okay, it is like solving 3 easy questions of intermediate. Add back depreciation. Add back depreciation. So this is your depreciation. Add back. Add back depreciation. So PAT plus depreciation will give you CFAT plus add back, add salvage value of plant and machinery. In the first paragraph, second line, salvage value is given. In which year you are going to write salvage value? In which year you are going to write salvage value? 1, 2, 3, 4 or 5? Answer please. So you are going to record salvage value in the 5th year. You are right. Very good, Anup. Next is add working capital recovery also. Don't forget, we have invested in working capital 800 lakh. Which year? Working capital recovery in which year? 5th year. Very good. So now what you do? You add these 4 lines which I have highlighted also with green background. That will give you net cash inflow. Point number M, write down net cash inflow. I plus J plus K plus L. I plus J plus K plus L. Total of these last 4 lines will give you annual cash inflow per annum or each year you can say. So that is 1605, 1561.25, 1561.25, 1528.44, 1528.44, 1503.83, 1503.83. And the last one, who will tell me the last one? You have to add last 4 numbers. PAT, depreciation, salvage value and working capital recovery. Yes, please reply. One student has replied 2759.98. Now write down PV factor at 15%, not 12%. Cost of capital is discount rate. Factor is given in the problem. If factor is given in the problem, you have to use it. Point number N, PV factor at 15%. Copy from the question. And now last point, PV of cash inflow. Please multiply M into N. Line number M into N. And also take the total. Use memory plus function. I need total also. This into this equal to memory plus. This into this equal to memory plus. Try the third one. 1004.18 memory plus. Try the fourth one. 858.68 equal to memory plus. Try the next one. 1371.71 and memory plus. Memory recall now. Student has to know how to solve fast. I need the total of PV of cash inflow. Anybody for the total of this last 5 numbers? give me the total. That will give me PV of cash inflow. Check the answer from my answer. Total PV of cash inflow. Total PV of cash inflow. Please confirm the total 5809.62. 5809.62. Is it right? Yes. So this is PV of cash inflow. I have to deduct initial investment in plant and machinery and working capital. So write down below NPV equal to, write below NPV equal to PV of cash inflow minus PV of cash outflow. PV of cash inflow is 5809.62 and outflow is plant and machinery 2000, working capital 800, 2800. Please reply. What is NPV? What is NPV? Anybody? NPV of the original project? 3009.62 lakh. Very good. 3009.62 lakh is right. 3009.62 lakh is right. So this is my original answer. Very easy basic question. But what they have done, they have asked you, what if the selling price reduces by 10%? Selling price, if it reduces by 10%, it will become 450. But what about the variable cost? Will variable cost also automatically reduce? Or variable cost will take from the previous question? What is your view? If selling price is 450, variable cost, option A 250, option B 225, which one you will take? Which one you will take? 250, the same one, or 50% of 450? Please reply little fast. Some students are saying 225. Some students are saying 225. Any other option? Any other answer? 250, 250, 225. The answer is 250. We are going to keep variable cost as per previous question only. Only selling price will change. Only selling price will change. Because of the let's say increased competition, I have to reduce my selling price, but my variable cost of material labor, they are not going to change. They are going to remain same. So we are going to assume that my variable cost will remain as per the original question. Only the selling price will change. So first you write an advice. NPV of the project is positive. Question was determine the viability of the project. If they ask you determine viability, then you have to write the advice. NPV of the project is positive. NPV of the project is positive. Hence the project is viable. Hence the project is viable. Hence the project is viable. Now write down step 3. Step 3, write determination of sensitivity. Determination of sensitivity of NPV. Determination of sensitivity of NPV with respect to decrease in selling price by 10%. With respect to decrease in selling price by 10%. Under that 5 columns again, year 1, 2, 3, 4, 5. If you have the scale, preferably use a scale. Preferably use a scale. Okay. Now start writing. Very similar format to the previous one, but this time I am going to write selling price separately and variable cost separately. So write down first point A, sales volume quantity in lakhs, 10 lakhs. New selling price will be 500 minus 10%, selling price will decrease, but variable cost we will take same. Variable cost may not change. Variable cost is material, labor. Why will they change if you have to reduce your selling price because of fall in demand or increase in competition or any government policy or anything? So we are assuming variable cost will be same as per previous question. 250. Contribution 200. Total contribution multiply A into D, 2000, 2000. Now write down less fixed overhead, then 300, fixed overhead 300, PBDT same 1700 in all the years, PBDT 1700 in all the years, less depreciation already computed in step 1, same we will continue, because in this problem, the one which we are solving, the plant and machinery cost has not changed. In the next answer it will change, so that will change my depreciation. Less depreciation. After that PBT, calculate PBT, please little fast. 1200, 1325, 1418.75, 1489.06, 1541.80. Then we'll compute tax at 35%. First number take 0.35 into 1200, 420. Now just type 1325 and press equal to 463.75. Next one 496.56. Next one 521.17, and next one 539.63. 539.63. Please confirm if it is right. Is the tax calculation right? Yes. Now write PAT. I minus J. PAT write down 780, 861.25, 922.19, 967.89, 1002.17. Please check PAT. Is PAT right? 1002.17. Last one, is it right? Yes. Then go to add back depreciation. Copy depreciation again. Add back depreciation. Then you will write add salvage value of plant and machinery. Add salvage value of plant and machinery in the last column. And one more thing, add recovery of working capital in the last column. Add recovery of working capital 800 in the last column. Nothing is given, assume working capital is fully recovered. So that comes to 800. Now net cash flow. Add these 4 lines. K plus L plus M plus N. Please solve. Solve yourself. After solving, check the answer. After solving, check the answer. Write PV factor and compute present value. Anybody? What is the NPV? What is the present value total? Can you please reply present value total? Present value total. Last line total. Last line total. Total of the last line. Anybody total of the last line? Check the answer. It comes to 4270.88. Yes, 4720.88. Kindly confirm. 4720.88 is right. Yes, please confirm. Otherwise, if it is wrong, our answer will be wrong. You have to check. Now write down below that NPV equal to 4720.88 minus 2800 minus 2800, that is 1920.88. Correct? NPV has gone down. Compare with the previous NPV and please reply. If you don't reply, I will not move ahead. Reduction in NPV in percentage. Reduction in NPV in percentage. Previous answer was 3009.62. Now it is 1920.88. By what percentage NPV has declined? By what percentage NPV has declined? The answer is 3009.62 minus 1920.88 divided by 3009.62. The answer is right. Wonderful. 36.17 or 18 is okay. 36.17 or 18 is okay. This is right. Okay, so the same thing we have to do now. If the project cost increases by 10%, so what will happen to my depreciation? My depreciation will change. Write down step 4 now. Step 4. Step 4, write determination of sensitivity of NPV. Determination of sensitivity of NPV with respect to increase in project cost by 10%. With respect to increase in project cost by 10%. With respect to increase in project cost by 10%. Under that we'll have two steps, A and B. In step A, we'll have to calculate revised depreciation. So write down calculation of revised depreciation. Calculation of revised depreciation format is same. Year 1, 2, 3, 4, 5. And you will write opening balance, depreciation at 25%, closing WDV. Opening balance, you start with 2200 and now you complete the table. 25% is 550, balance 1650. Continue yourself. 1650, try yourself. Yes, you can do it. 412.50, 1237.50, 1237.50, 309.37, 928.13, 928.13, 928.13, 232.03, 696.10, 696.10, 696.10, 174.03, 522.07. So this is my closing block as per books, but your salvage value is different. Salvage value in the question is 474.61. Which figure will you take in salvage value? Will you take option A 522 or option B 474 in the salvage value? Please respond. Which option will you exercise, A or B, while writing salvage value? While writing salvage value, which option will you exercise? Some students are saying 474.61. Some are saying 522. The correct answer is 474.61. Same value will take, will not change ourselves anything. But what about the loss? Capital loss. There is capital loss because your sale value is less than book value. Sale value is less than book value. If sale value is less than book value, there will be a capital loss. Either you can compute tax shield, on short-term capital loss, or you can ignore it. What we will do? Tax shield on short-term capital loss or ignore it? What is your view, A or B? Tax shield or ignore the capital gain or capital loss adjustment? We will ignore it by writing a note. Is it right? We will try to follow the same assumption which the institute is following. Is it right? So write down step number B, calculation of revised NPV. Calculation of revised NPV. Calculation of revised NPV. Under that 5 columns, year 1, year 2, year 3, year 4 and year 5. Then you write down PBDT. PBDT as calculated in step 2. Go to step 2. Step 2. Right now we are in step 4. Selling price is same, variable cost is same, contribution is same, quantity sold is same. Therefore, fixed cost is same, therefore contribution, therefore PBT will be same. Go to step 2, please check, are you getting 2200? Are you getting 2200? Yes, same. Or you want to write 5 lines again? Please tell me. If you want to write 5 lines again, we can do that also. But that is a gross wastage of human time and talent. Depreciation will change. So write down less depreciation, step 4A. Step 4A. Step number 4A, previous step. Previous step 550, 412.50, 309.37, 232.03, 174.03. Then write down PBT. PBT will be 1650, 1787.50, 1890.63, 1967.97 and 2025.97. Please confirm, then I'll go ahead. Is it right? Is it right? Yes. Then we'll go to less tax at the rate 35%. First number you type like this, 0.35 into 1650 equal to. Then you only type 1787.50 and press equal to. You will get this number. Next number. Number and equal to. This is shortcut trick on calculator to save time. Then you write down PAT. C minus D. C minus D. 1072.50. 1161.87, 1228.91, 1279.18, 1316.88. Add depreciation, add back depreciation, common, same number, same line copy here. Add back depreciation, then write down add salvage value of plant and machinery, add salvage value of plant and machinery, in bracket write down assuming no capital gain tax implication, assuming no capital gain tax implication, assuming no capital gain tax implication. So last column same figure, last column same figure, assuming no capital gain tax implication. If you want to take capital gain also you can, then you have to make one more working note for that. Now next point write down recovery of working capital. Next point H, recovery of working capital, last column 800. Net cash inflow. Net cash inflow, write in bracket E plus F plus G plus H. Net cash inflow 1622.50, 1574.37, 1538.28, 1511.21 and 2765.52. Next point write down J, PV factor at 15%. Again copy the same factor, copy the same factor, copy the same factor and then write down K, PV of cash inflow, I into J. Write down please little fast, PV of cash inflow, I into J. PV of cash inflow, I into J. Write yourself, take the total, use memory plus function, use memory plus function. use memory plus function. What is the total now? I am waiting for your total now. Anybody for total? Yes. Total, please. Check the total. Is it 15,848.18 lakhs? Just confirm yes or no. Yes. So this is my PV of cash inflow if the cost of the project increases. Now write down NPV. NPV equal to 5848.18 minus 3000. 5848.18 minus 3000 is equal to 2848.18. 2848.18 lakhs. This is my NPV after change in cost of the plant and machinery. Note, write down reduction in NPV in percentage. Reduction in NPV in percentage. So your original NPV was 3009.62. This is your revised NPV divided by original NPV, and the answer please check and confirm. Is it 5.36%? Just confirm. Is it 5.36%? Yes, Anup, is it 5.36%? Yes, very good. So project is more sensitive to which variable? Project, write down note. Project is more sensitive to selling price. Project is more sensitive to selling price, because in case of selling price reduction by 10%, the NPV had gone down by 36.18%, but in this case it is only 5.36%. Next we are going to learn is called scenario analysis. Scenario analysis is very easy, much easier than your sensitivity analysis. Sensitivity analysis has two limitations. One, that it does not deal with the probability distribution of input, and second, it does not deal with more than one variable at a time. Refer the previous question. Either we change selling price or we change plant and machinery cost, but we don't change both at a time. But practically one variable will not change only. More than one variable can change at a time. More than one variable. Project cost can also go up, selling price can also go down, and fixed cost can also increase. So how do you handle this kind of scenario? That kind of situation is handled by what is called scenario analysis, where we are going to change more than one variable at a time. Project cost can also increase, sales can also decrease, fixed cost can also increase, and then we will see if this happens, how the NPV would change. So the scenario analysis is a slight improvement over sensitivity analysis. This analysis brings in the probability of changes in key variable. So we are also going to consider probability of change in key variable. An important thing is this line, more than one variable can be changed. Scenario means if project cost is this much, selling price is this much, sales quantity is this much, fixed overhead is this much, then what is the NPV. And again in second scenario, we can take 2, 3, 4 variables different. We can change more than one variable in the second scenario or third scenario. So multiple scenario we can do, and then we will be able to take a more informed judgment. This analysis begins with the base case or most likely set of values. So first we will take base example. Base case means what is more likely to occur for the input variable. We will also test worst case scenario. When the question says test for worst case scenario, you will take simultaneously the lowest quantity that can be sold, the lowest selling price, the highest variable cost, the highest fixed cost, the highest project cost, etc. And when the problem says test the project for best case scenario, in best case scenario we will take the sales quantity which is maximum possible, highest selling price possible, lowest variable cost possible. So all variables we will assume will be in our favor in best case scenario. In worst case scenario, all variables will be against us. Alternatively, scenario analysis is possible when some factors are changed positively and some factors are changed negatively. This can also be done. Two variable you can change positively. Like for example, you can say sales will increase, selling price per unit will increase, and two variable you can change negatively also. Variable cost will also increase, fixed cost will also increase, and then what will be the NPV. So as according to your estimation, your judgment, you can change some variable positively, some variable negatively also. And then scenario analysis, examine the risk of investment to analyze the impact of alternative combination of variable on project NPV. So this is one step ahead of sensitivity analysis. If more than one variable change, how the NPV would change. For a theory question in the exam, difference between scenario analysis and sensitivity analysis. So I will not read that big paragraph. Later on you can read as homework whenever you have time. In sensitivity analysis, one variable is tested at a time, keeping other variable constant. In scenario analysis, more than one variable can be changed at a time. So that is the difference. Okay, both helps us to understand the riskiness of the project, but sensitivity analysis will say, okay, wait, take one at a time, and see how the project will be affected because of that change in one variable. Scenario analysis says, oh, what you are doing? You are making a wrong assumption. How can only one variable will change? More than one variable can change. So let us change more than one variable and see the impact on the NPV. Is it right? Now we'll go to question number 4, 848, taken from your study material. Problem number 48. Good question. XYZ is considering a project A with an initial outlay of rupees 14 lakh and the three possible cash inflow attached to the project are as follows. Year 1, year 2, year 3. Suppose it's a worst case scenario. There are three scenarios possible. Worst case scenario means in year 1 you will get 450, 400 and 700. But in most likely scenario, which is more likely to happen, is 550, 450 and 800. But suppose your luck is good, best case, then you will get 650, 500 and 900. So depending upon which scenario unfolds in future, you can have three different NPVs. Assume cost of capital is 9%, that is for discounting. Determine NPV in each scenario. So it's basically solving three basic questions. One, you will take this cash flow and solve. Second, you will take this cash flow and solve. Third, you will take this cash flow and solve. Even a school level student can answer this question if he knows present value calculation. Now the next point is, if XYZ Limited is certain about, second question, this is my first question. Second question is, if XYZ Limited is certain about the most likely result in the first 2 years, means he is certain that we are going to get 550 and 450 in the first 2 years, that is certain, but uncertain about the third year cash flow. But we don't know what can be the third year cash flow. Analyze what the NPV will be, expecting worst scenario in the third year. So if third year is worst scenario, you will assume 700. So you have to recalculate NPV assuming most likely scenario in the first and second year and worst scenario in the third year. That is the advantage of this scenario analysis. You can take some most likely figure also, and you can take one figure from worst case scenario also. So mix and match is possible. So we have to write how many answers? Total 4 answers. Total 4 answers. Is it right? Come on, start. First answer first. Calculation of NPV under different scenarios. This is my original question, and then I will take one more answer where first and second year will be based on most likely and third year will be based on worst case. Right. Calculation of NPV under different scenarios. First you draw this table. Take a scale, pencil, write nicely. One day you have to appear in the exam. First column year, second column present value factor at 9%, third column worst case, under that 2 columns cash flow, present value, then most likely 2 columns cash flow, present value, last best case, cash flow, present value. Then you write down year 0, 1, 2, 3. PV factor, write down PV factor at 9%. All of you write the same factor. 1 divided by 1.09, 0.917, 0.842, 0.772. Then you write down cash flow in the worst case scenario. Initial investment will be same. Initial investment will be same. Here you write down rupees in 1000. Please write down top right corner rupees in 1000. 1400, 450, 400, 700. Can you see that in worst scenario? Now please use memory plus function also, so that you can take total faster. Come on, start. 450 into 0.917 equal to memory plus. 400 into 0.842 equal to memory plus. 336.8. 540.4. Total. 110.15. 110.15. 110.15 negative. 110.15, please check. Please confirm, is it right? Most likely now. Most likely cash flow, write down from the question book. Cash flow, write down from the question book. Multiply PV factor into cash flow. Use memory plus function to do fast. 504.35, 378.90, 617.60. Tell me the NPV now. 100.85. Last one. Come on. Student should react little fast. This is the factor. These are the cash flow. Solve like a school level question. Take total. Multiply equal to memory plus. Do it yourself. Give me the total. Do it yourself and give me the total. What is the total of the last column? Total of the last column, please. Is it 311.85? Yes, very good. Now write down second part. This question has two parts. One is if worst scenario in all 3 years, most likely in all 3 years, best case in all 3 years. But there is one more possibility, most likely in the first and second year and worst scenario in the third year. Then what is NPV? So write down the new heading, calculation of NPV. Calculation of NPV. If XYZ Limited is certain about, the most likely result in the first 2 years, and uncertain about third year's cash flow, First column write year, second column write PV factor at 9%, third column cash flow rupees in 1000, last column present value rupees in 1000. Like the previous question solve, year 0, 1, 2, 3, copy the factor from the previous answer, copy the factor, cash flow in year 0 will be same, year 1 and 2 take from most likely situation, and year 3 take from worst case scenario, 700. Now you can solve. You have to be just careful, alert, and you can do it. Please solve. Tell me the total now. Tell me the total quickly. Last column total. What is the NPV? One student has replied 23.65. Very good. Amazing. Some of the students are really good student. 23.65 is right. So this was the answer of this question. Scenario analysis problems are very easy. One more easy question will solve from a reference book. Question number 49. AS Limited has under consideration two mutually exclusive proposals for increasing the plant capacity. The management has developed pessimistic, most likely, and optimistic scenario, an optimistic estimate of the annual cash flow associated with each project. The estimates are as follows. In case of project A, net investment is 30,000. If cash flow estimates are pessimistic, you will get 1200. Most likely you will get 4000, and in optimistic scenario you will get 7,000. In case of project B, investment is same, but in pessimistic scenario, you will get 3700. In most likely scenario, 4,000, and in optimistic scenario, 4500. Determine the NPV associated with each estimate. NPV associated with each estimate means you will have to calculate 6 answers. If this is the cash flow, what is the answer? If this is the cash flow, what is the answer? If this is the cash flow, what is the answer? Same thing for B. The project has 20 years life each. Oh my God. So this NPV factor you have to compute for 20 years and the cost of capital is 10%. Which project do you consider should be selected by the company and why? Which project should be selected by the company and why? This time they have added one decision making question also. Okay, so what do? I will solve. So please write down calculation of NPV of project A under different scenarios. Calculation of NPV of project A under different scenarios. So there are 3 scenarios. Which are these 3 scenarios? That is your right hand side 3 columns. Pessimistic means worst scenario, most likely, and the last one optimistic means best scenario. So first you write down point A, CFAT. CFAT will be 1200, 4000, 7000. Point B, PV annuity factor 10%, 20 years. So please take your calculator and give me the answer. 10% 20 years. What will be the answer for 10% and 20 years? Can you please reply? 10% and 20 year. 8.5136. 8.5136. 8.5136. Point number C, write down PV of CFAT. PV of CFAT. So you will say 1200 into 8.5, or I'll tell you one shortcut. First you type 8.5136 into 1200 equal to, round off the last digit, 10216. Then just type 4000 and press equal to, you will get 34054. And now you type 7000 and press equal to, you will get 59595. And then point number D, write down less initial investment. Initial investment is 30,000. 30,000. Point number E, NPV C minus D. NPV C minus D. First answer 19784 negative. Second answer is 4054 and third answer is 29595. These are the NPVs under the three scenarios in case of project A. Question is from reference book, important question. Now write down in the same way, calculation of NPV of project B under different scenarios. Under different scenarios, pessimistic, most likely, optimistic. First point A, CF80. Here the answer is 3700, 4000, 4500. Point number B, PV of CF80. CF80 into 8.5136. Okay, 8.5136 into 3700. So you are getting 31500. This will be same, 34054. And the last one, 38311. Point number C, less initial investment. This is also 30,000, 30,000, 30,000. So point number D will be NPV, B minus C, 1500, 4054, and this is 8311. This is your first answer. Determine the NPV associated with each estimate for both the projects. Now the second part of the question is, which project do you consider should be selected by the company and why? Which project would you select and why? Everybody would reply. Everybody. If you are the decision maker and if this is the scenario in front of you, project A can have these three NPVs, project B can have these three NPVs. So please reply, if you were the decision maker, which project you would select, A or B, A or B. You just have to mention A or B. One student is saying B, one is saying A. That shows the nature of the investor. The answer is, if you are a risk-averse investor, if you are a risk-averse investor, you don't want to take any risk, you will go with project B, because project B will generate positive NPV in all the three scenarios. Okay, but if you are a risk taker who wants to maximize his return, you will go with project A, because in project A, in optimistic scenario, the return can be very high, which is almost 3 to 4 times of what you will get in project B. Is it right? So the answer of this question is, it depends on the risk perception of the investors. So I will give you the answer. Write down. Decision. The project to be selected would depend upon the decision maker's attitude towards the risk. Is it right? So there is no right or wrong answer. It depends on your risk taking ability. Some students do CA course, some they don't. Is it right? Because they know, those who don't pursue CA course, they think that the risk is too high, but you are doing it. You are right now attending the class, which shows that you are a risk taker, because you know the risk of doing CA course is very high. You are putting your entire prime time of your life, the youth of your life, the age of 18 to 23, which is the prime time of your life. You can become anything you want. You have invested in doing this course, and there is no assurance. Okay, I don't want to discourage anybody, but the probability of passing every exam is only 12 to 15, 20%. So you are also risk taker. You are the biggest risk taker. There can't be one answer when it comes to risk taking. Different people have different attitude towards the risk. So answer B would be selected by majority of the decision maker, because most people are risk averse. But there are few people who can take risk and who will select project A also, because if you select project A and if optimistic scenario prevails, you can get a very high return. So next line, write down, if the decision maker is risk averse, he will select project B. He will select project B because project B generates positive NPV in all three scenarios. Project B generates positive NPV in all three scenarios. However, if the decision maker is risk taker, he will select project A because project A generates a very high return in optimistic scenario. Generates a very high return in optimistic scenario. Okay. So once you pass C exam, your return will be much higher than many other people on this planet Earth. Okay, because you have taken that risk. So that was the answer of this question. Now we are going to celebrate half century of the questions. Question number 50. This question is very important. From study material May 22 RTP, April 21 MTP for 7 marks. Okay, write down important question, because this will require some intelligence also. Previous two questions were without any intelligence. Anybody can do it. Now we'll come to question number 50. SG Limited is considering a project Z with an initial outlay of 7,50,000 live 5 year. The estimate of the project are as follows. Lower estimates. base estimate, upper estimate. See the drafting of the question, lower estimate. On the lower side, this is what can happen. This is base case, means on an average, and this is the upper range. Sales 4500, 5000, 5500, means in worst scenario 4500, average scenario, most likely scenario 5000, and in optimistic scenario or best scenario 5500. Selling price per unit, this is worst case scenario, it will be low. Base case 200, best case, optimistic case 225. Now what about this variable cost 100 and 150? In case of cost, 100 represents best scenario, lowest, and 150 represents worst scenario, because in terms of cost, higher cost is not good, lower cost is good, and same thing for fixed cost. In best scenario, fixed cost will be 50,000. In worst scenario, it will be 1 lakh, whereas this is in case of sales and selling price. These are worst scenario, sorry, this is best and this is best. So don't go by the column, go by the understanding. In case of revenue items, higher is better, lower is worst. In case of cost item, lower is better, higher is worst. And then depreciation included in fixed cost is 35,000. This time they have used the word included. In some previous question today, the wording used was excluded. So this 50,000 or this 75,000 or this 1 lakh, they include 35,000 rupees of depreciation already included, and tax rate is 25%, cost of capital is 15%. Determine NPV in worst, base and best case scenario. The mistake that the student can make, they can take all these numbers in the worst case and all these numbers in the best case, but it will be opposite. It will actually be opposite. You or not opposite actually. Two numbers from worst case here you will take, and two numbers for worst case you will take from here. Similarly, in best case, selling price and sales quantity you will take from here, and variable cost and fixed cost you will take from here. So that much care you have to take. As far as base case is concerned, there is no problem. You will take the same data given to you. PV factor is given at 15% as follows, and you can use them if you need them. So should we solve it or should we give as homework? Classwork or homework? Quickly reply. Classwork or homework? Classwork, I know, because you don't have time for homework. Your schedule is very busy. No problem. Write down. First, I'll give you a note before you forget. Note, write down. In worst case scenario, take highest cost, take lowest selling price, take lowest sales volume, bracket sales unit. Below that write, in best case, take lowest cost, take highest selling price, take highest sales volume, take highest sales volume. If you have this much understanding, then the problem will be easier. Okay, now write down step 1, calculation of yearly cash inflow. Little fast. little fast. Question is very easy. Only once you identify the numbers you have to take, then my job is easy. 3 columns on the right side, worst case, best case. Sales unit, in worst case I will take the lowest quantity that can be sold, 4500. In base case we will take 5000. In best case we will take 5500. Then these are in quantity. Below that rupees. Now selling price per unit, selling price worst case will be lowest selling price 175, 200, and best case highest selling price. Variable cost, now here we have to be very careful. Okay, here write down, be careful. Don't follow the sequence of the question. Don't follow the sequence of the question. You write 150. If suppose it's a worst case, variable cost will be highest, 150, then 125, 100. And contribution per unit, B minus C. Contribution per unit, please write B minus C, 25, 75, 125. Total contribution, A into D. Come on, little fast. Come on, A into B. A into D. A into D. Quantity into contribution per unit. 1,12,500. Very good. Next. 3,75,000. Again next. 6,87,500. That is my total contribution. Now write down less fixed cost including depreciation. Less fixed cost including depreciation. 1 lakh is the highest fixed cost I will take, which includes depreciation of 35,000 also. 75,000 and 50,000. Then write down EBT. EBT will be E minus F. Contribution minus fixed cost, 12,500, 3 lakh, 637,500. Then write down less tax at the rate 25%. First number you type like this, 0.25 into 12,500. You will get this answer. Now just press 3 lakh and press equal to, you will get the next answer. Similarly 637,500, press equal to 159,375. Earning after tax, G minus H, come on, 9,375, 2,25,000, and the last one 478,125. Add back depreciation. So under that add back depreciation you will write 35,000 each, because this fixed cost is including depreciation and depreciation amount is constant. If you add these two numbers, you will get cash inflow. Come on, cash inflow will be equal to I plus J, 44,375. Without calculator you can do it. 2,60,000 and 5,13,125. 5,13,125. Is it right now? Now write down next line. Calculation of NPV in different scenarios. Calculation of NPV in different scenarios. Under that 3 columns, worst case, best NPV. Cash inflow, go to the step 1. Go to step 1, cash inflow. 4,4375, 2,60,000, 5,13,125. Then PV annuity factor 15%, 5 years. PV annuity factor, you add the factors given in the problem. you will get 3.353. Please confirm. 3.353. Is it right? Say yes. 3.353. Therefore, PV of cash inflow. Very good. PV of cash inflow. A multiplied by B. First number, type this into this 44375 equal to. Now just type 2,60,000 equal to. Just type 513,125 equal to. You can round off the numbers if you want. Point number D, less initial investment. Under less initial investment, 7,50,000. Therefore NPV, come on. C minus D, first one is negative. 6,01,260, 210.62. You can round off to 211 also. Second one is positive, 121,780. Third one is also positive, 9,70,508. This answer is over. This is called scenario analysis. If worst scenario takes place, what will happen? Best case scenario takes place, what happens? Best scenario happens, what happens? And then according to your risk taking ability, you may or may not decide to go ahead with the project. Is it right? Now the interesting part of this chapter, the most interesting part of this chapter is decision tree analysis. What is a decision tree? It is a statistical technique which helps you to arrive at a decision out of several alternatives. When we have several alternatives in front of us, we are confused. What should we do? Should we do this or this or this? Should we take this decision or this decision? Every decision will have outcome. So we have to analyze those outcomes. We have to analyze those decisions and then arrive at the final decision. So it is a mathematical tree, step or technique which helps you to arrive at a decision out of several alternatives, where each alternative can also have multiple outcomes or consequences. Is it right? To understand the concept of decision tree, we have to first understand with the help of one small example, okay, a time pass example, but helps you to understand the concept. There is a student who asked me, sir, what should I do? Should I do CA or should I do MBA? I said, see, let us evaluate using a decision tree approach. He says, wow, you have a decision tree approach for such decision also? I said, yes, I have. So decision tree looks like a tree with branches, and that is why the name given is decision tree. Decision tree will be drawn from left to right. That means we will start from this side and move towards right. Decision tree is drawn from left to right. You can't draw from right to left. This will be wrong because the standardization is left to right. And if you have to take a decision, you will draw a rectangle or a square, whatever. Should look like a rectangle or a square. And you will give them numbers also. Okay, this is my first decision that I have to take. So I have to draw branches emerging from that. It is called decision node. We will call it decision node, N-O-D-E, decision node. and from decision node you have to write all the alternatives that you have. In our example we have only two, CA or MBA. Suppose you can have one more, CMA, or you can have one more, CS or LLB. No problem, you can write 2, 3, 4, 5, 6 decisions, 6 alternatives, which out of which one you have to choose. So depending upon the question we can have 2, 3, 4 branches emerging out of it. So write down what you want to do, CA course, what you want to do, MBA course, but there will be outcome. If you do CA course, what are the outcomes? Outcomes will be represented by a circle and they are also numbered. C1, circle number 1, or consequence, we can also call them consequence. If you take any decision, you have to face the consequences also. If you do MBA course, there will be consequences, so we'll give them C2. Outcomes or consequences will be numbered as C1, C2, C3, C4. Decision making box will be numbered as D1, D2, D3. So the consequences are, you will get a salary of 3 lakh rupees only. Suppose you have taken multiple attempts to pass, whose probability is 0.2. We will include probability also because outcomes can have different possibilities. You will become CA and you will get a salary of 3 lakh rupees whose probability is 0.2. You will become CA, let us say in 1 or 2 attempts, your salary will be 5 lakh whose probability is 0.4. Or you can become a rank holder also and your salary will be 9 lakh whose probability is 0.4. Okay, if you do MBA, here also we have consequences. Please draw the diagram in your notebook also, in your book also. Please simultaneously draw in your book. Are you drawing or just watching the show? This is not for watching the show. It is not a movie or a web series. You are learning. You have to be active and write also. So if you do MBA course, you will get 2 lakh rupees with 0.2 probability, or 2,50,000 with 0.4 probability, or you may get 3,50,000 with 0.4 probability. Suppose the decision is taken only on the basis of which course will give me higher salary. Is it right? The basis of decision is salary maximization. So what do? If I do CA course, these are my 3 possible salary package with these probabilities. If I do MBA course, these are my 3 possible salary packages with these 3 probabilities. So then I am going to calculate expected value of C1. What do you mean by C1? C1 means to do CA course. Expected value means I will take all the outcomes and I will multiply by their probabilities. So this is how we will compute expected value, expected salary. Because there are more than one with different probabilities, I have to find expected value. In case of chance node, I have to multiply outcome with probability. Can anybody be good enough and give me the answer? Because otherwise I have to do myself. Today there is no student in the classroom. They have all gone for holidays. 3 lakh into 0.2. Please reply first. 3 lakh into 0.2 is how much? 60,000. 5 lakh into 0.4, 2 lakh. and 9 lakh into 0.4, 3,60,000, total 6,20,000. So my expected salary of doing CA course is 6,20,000, and one more line, expected value of C2. Do it directly and give me the answer. 2 lakh into 0.2, 40,000, 2,50,000 into 0.4, that is 1 lakh, and 3,50,000 into 0.4, that is 1,40,000. So 140 plus 1, 240 and 20, 40, 280, very good, 2,80,000. Now we'll write expected value of D1. Wait a minute, decisions don't have probabilities, outcomes have probabilities. In case of decision box, I have to make a choice here between CA and MBA course. And what is my objective? My objective is maximization of salary. C1, which is CA course, 620, and C2, which is MBA course, is 280. So what will be the value of D1? The value of D1 will be higher of 6,20,000 and 2,80,000, which is 6,20,000, and 6,20,000 is the value of C1. So my decision, write down decision, join CA course, join CA course. And this way I was able to tell the student that, dear student, see, this is how we have taken the decision only on the basis of numbers. Okay, so this was just a simple example of decision tree. It can be applied in many fields. Okay, it can be applied in many fields. It can be applied in the field of finance also, for taking decision when we have multiple options available. For example, it can be simply project A, project B, and if I take project A, these are the possible NPVs and their probability. If I take project B, these are the possible NPVs and their probabilities. So it becomes a decision tree problem of project also. There can be a problem, expand the plant capacity, do not expand the plant capacity. Then also we can draw decision tree like this. Then we have one question in the book, whether to print books or not to print books. Print books for CA final, do not print books for CA final. That is also a decision making point. So in the coming questions we are going to see several decision making points. So first we'll take a small break of 10 minutes. In the break you can either relax, have tea, coffee, biscuit, sambar, idli, or you can read this paragraph, whatever suits you. So see you after 10 minutes. Hello, we are back. How are you? Enjoyed your break time? Let us come to discussion on decision tree analysis. First, we'll discuss the background, the theory part. Then we'll take some interesting question. Today you will practice all these questions. That will really be useful to you. For a theory question, what is decision tree? It's a statistical technique, okay, where we are going to present various decisions that we have to take or various alternatives out of which we have to take decision. Like in the previous diagram, we had to make a decision out of two alternatives, whether to do CA or MBA, and then what will be the possible outcomes. If I choose a particular course of action, what will be the outcome, what will be the probability. In capital budgeting, what we are supposed to do, we are supposed to identify what are the various alternative courses of action, and then what will be the outcome and how to take decision. All these alternatives and outcomes are presented in a decision tree. This will give you a very good understanding about the question. When you draw the question in the form of a decision tree, it gives you a complete idea what are the various alternatives, what are the outcomes, and it will help us to take a decision. So in short, I have written one note here. A decision tree is a presentation of various decisions, possible outcomes, and their probabilities at various stage of a project. So basically it gives you a visual idea. What are the options? What are the alternatives? There are two steps in preparing a decision tree. First step is to draw the decision tree itself. Now this is the most important task, because if this is right, this itself will be right. By reading the question, you have to identify what are the alternatives we have, what are the outcomes of these alternatives, and sometime one decision may lead to another decision. That is to do CA course. Suppose if I do CA course but I don't get a good package, should I do CPA also? That can be another decision making issue now. So one decision may lead to sometime another decision. Is it right? If the product is successful, suppose if the product is successful, should we expand the capacity or should we not expand the capacity? There can be another decision that you may have to take. Which is the most critical task for a student? To read the problem and understand what are the decision issues involved and what are the consequences, what are their probabilities. If you can do this, step number 2 is automatic. Step number 2 is to incorporate probabilities, relevant values, and then derive expected monetary value. If you remember, we have derived monetary value of doing CA course, monetary value of doing MBA course, and accordingly we took the decision. To keep your life easy, I have put this whole discussion into 7 steps. Step number 1 is, there are 7 steps in drawing decision tree, which you can call 7 rules also. This is not legal subject. Just for understanding, we have written first rule is you begin with a decision point. Like we started with a decision point D1. It is also called decision node, represented by a rectangle or a square, no problem. An outcome point, once you take a decision, there will be outcome also called chance node, is denoted by a circle. So by looking at the diagram, one can understand that these points are decision points, these points are outcome or chance or consequence point. Then you will write rule 2, decision alternative. Decision alternative to do CA, to do MBA, okay, are shown by a straight line originating from the decision node. Point rule number 3, a decision tree will be drawn from left to right. A decision tree will be drawn from left to right, and decision box and chance node are sequentially numbered so that it is easy to identify which decision node or which chance node we are talking about, because in a bigger problem there can be 3 or 4 decision box, there can be 3 or 4 chance node, so it is better to number them sequentially. Normally we will follow for decision nodes D1, D2, D3, D4, and for chance node or outcome node we will follow this sequence, but it is not a hard and fast rule. You can write A, B, C, D, E, F also. Then one thing which is easier in the problem, the institute will give you probabilities. Values and probabilities for each branches are incorporated like we have done. 0.2, 0.4, 0.4, he will get 2 lakh, 4 lakh, 7 lakh. Next is the value of each circle and each rectangle is computed by evaluating from right to left and mark. Evaluation will be done from right to left. That means the rightmost circle or rightmost decision node will be first valued. You will move backward till you reach D1, decision node 1. So that is how evaluation will be done. If it is a chance node, outcome node, then the expected value is the aggregate of expected values of various branches that emanate from the chance node, which means it is a sum of the probability into values. Look at that CA versus MBA diagram. Expected value of doing CA course was 0.2 into the value plus 0.4 into value plus 0.4 into value, and that becomes the value of a chance node. And the expected value of a decision node, in our example CA versus MBA, our objective was maximization of salary. I will take highest value, highest among the expected value of the various branches that emanate from the decision node. Now here I need to tell you one more thing. You can write also, please write also, later on you will forget. In case of cost minimization problem, select the lowest value. There are two types of question we are going to solve. Most of the question will be maximization of benefit, so we'll take highest value, but there are questions where we have to minimize the value. Like for example, a problem involving only cost, then I would try to minimize the cost, and then in decision box will take that option, that decision which results into lower cost. So these are some basic rules in decision making, and very easy also. Draw from left to right. Decision box is represented by rectangle, chance node is represented by circle. They are sequentially numbered. Evaluation is done from right to left. Value of a chance node is expected value, that is probability into value. Value of a decision box is highest number or the lowest number, depending upon what is my objective of decision making, whether I want to maximize the profit or minimize the profit. Advantage of decision tree is that it will give you a visual appearance of all the outcomes, all the alternatives, so that you can understand the situation better and you can take a proper decision. It helps the management to take more appropriate decision. Welcome to question number 51. Source, write down reference book. Source reference book. The purpose is, first you start with a easy question, and there was no easy question in your study material of the institute. So I have to first give you one easy question similar to the one which we discussed few minutes back. So my dear student, come to question number 51. AS Limited has the following estimate of the present value of future cash flow after tax. Underline. So good news is that you don't have to compute the present value. The present values are already computed for you. These are already in present value terms. So this is one type of question where present values are already done, and the question is whether to expand the plant capacity. Company intends to use a decision tree approach to get a clear picture of the possible outcome of this investment. When the problem says use decision tree approach, you have to also draw the decision tree. The plant expansion is expected to cost rupees 3 lakh. If you expand the plant capacity, you will have to incur a cost of 3 lakh. But if you do not expand the plant capacity, you will not be required to incur 3 lakh. So while computing the NPV of the decision with expansion, you have to also consider the fact that you are going to invest 3 lakh rupees in that. So my net NPV will be after deducting 3 lakh. But if you don't expand the plant capacity, then you don't have to deduct 3 lakh rupees. You just have to compute the expected NPV without expansion. And these are the NPVs. These are the present values given to you. These are the probabilities. So we will assume the same probability applies to this 3 number also, and same probabilities applies to this 3 number. Sometimes they can give you different probabilities for with expansion and different probabilities for without expansion. Advise the company regarding financial feasibility of the project. That means whether the question is whether the company should expand the plant capacity or do not expand the plant capacity. So what are the two alternatives we have right now? The two alternatives that we have right now is to make a choice between whether to expand the plant capacity or not to expand the plant capacity. So the first step in decision tree problem is the decision tree itself. Right. Draw the diagram along with me. Okay, don't wait. Start on a fresh page. Start from the left side of the page. Draw bigger diagram. Easy for you to revise later. Start with D1. D1 is my decision node. I have to make a choice between expand the plant capacity, which will cost me 3 lakh, in bracket cost 3 lakh. And the other option is do not expand. If I expand the plant capacity, there will be consequences. Chance node, it is called chance node, C1. And what are the possibilities if I expand the plant capacity? If I expand the plant capacity, then as per the question, I can get cash flow of 3 lakh or 5 lakh or 9 lakh with probabilities 0.2, 0.4, 0.4. The probability will be written very close to the branch, very close, so that one can understand that this 0.4 is for this 9 lakh, that this 0.4 is for this 5 lakh, and preferably they should be written in the same line. Okay, even though it is a decision tree, but follow some discipline. You can't draw any tree that you want. It should look nice. For do not expand also we have same probabilities, and these are the outcomes. So preferably they should come on the same line. Easy to understand. Is the diagram understandable? The student will think the same diagram we have used for CA versus MBA also, with the same numbers also. You are right. That is the trick of a teacher, to explain a concept. Okay, it was this question which I converted into CA versus MBA so that you got more interested. So now see, we have two chance node and one decision node. So first we are going to evaluate C1, then we are going to evaluate C2, and then we'll move backward. C1 and C2 are emerging from D1. D1 is a decision box, so I will choose higher of these two options. Value of C1 will be expected value, which is the sum of the product of probabilities into their respective values. Is it right? So now let us put it in simple words. Step 2 evaluation. Step 2 evaluation, please follow me. Value of C1 is equal to 3 lakh into 0.2 plus 5 lakh into 0.4 plus 9 lakh into 0.4. Calculation must be displayed in the answer. So that comes to 6,20,000. That is the value of C1. Value of C2. 2 lakh into 0.2 plus 2,50,000 into 0.4 plus 3,50,000 into 0.4, that is 2,80,000. We have done this calculation in that example also. So value of chance node or outcome node will be expected value, like we have done just now. Value of a decision node will be depending upon what is my objective. In this question my objective is NPV maximization, so I will take higher of. There are two branches emerging from D1. One gives me 6,20,000, one gives me 2,80,000, but 6,20,000 is before deducting cost of expansion, so I will deduct 3 lakh rupees also. After deducting 3 lakh from 6,20,000, then I will compare. This is 3,20,000, this is 2,80,000. Answer is 3,20,000. 3,20,000 is the value of expand the plant capacity. Therefore the decision or conclusion will be the management should expand the plant capacity. The management should expand the plant capacity because expected NPV is higher. Because expected NPV is higher. That was a simple question. They are not going to ask you this question in the exam. Okay. Have you done? Please confirm. Have you done question number 52 now? Please come to question number 52. Now this question has got one historical significance also. Can you see that? Please guess what is the historical significance of this question number 52. Anybody guesswork? Yes, this is the exam in which I appeared and I also had to solve this question in the exam, and now my students will also solve. And one student is saying in this exam you got the rank also. Yes, you are right. And now this question was repeated in May 2004 exam also. and they have included in the study material. They have included one similar problem in the study material, only numbers are different. That you will find question number 53 below. 53 number, note down homework, or we'll see. Just wait. First come to 52. The SF Limited has an investment proposal requiring an outlay of rupees 40,000. The investment proposal is expected to have only 2 year economic life, 0 salvage value. In year 1, there is a 0.4 probability that cash flow after tax will be 25,000 and 0.6 probability that cash inflow after tax will be rupees 30,000. So in year 1, we can get 25,000 with 0.4 probability, or we can get 30,000 with 0.6 probability. That means if I start the project in year 1, there are two possibilities, 25,000 and 30,000. And then if I get 25,000, the probability assigned to cash inflow after tax for the year are as follows. If I get 25,000 in year 1, then in year 2, I will get either 12,000 or 16,000 or 22,000 with 0.2, 0.3, 0.5 probability. Is it right? If I get 30,000 in year 1, then I will have 3 outcomes in year 2. Either I'll get 20,000 or 25 or 30 with these probabilities. Is it right? Have you understood the question? The question is that suppose you start the project. I will roughly explain, you don't have to write. Then there are two possibilities in year 1. Either you will get 25,000 or 30. If you get 25 in the first year, then in second year you can get 12,000, 16,000, 22. If you get 30,000 in the first year, then in second year you will get 20, 25 or 30. And these are the probabilities given, which you will write next to that branch when we will solve it. Right now, don't write, just wait. So this is the diagrammatic picture representation of this problem. This is the decision tree, this is D1. Okay, the other option is not to start the project only. If you don't start the project, NPV is 0. Use 10% discount rate. This time the student will have to compute the present value, because these cash flows will come in year 2 and this cash flow 25 and 30 will come in year 1. So in this question we have to compute present value. Previous problem, all figures were already converted into present value. Construct a decision tree. That is how you will draw. What NPV will the project yield if worst outcome is realized? Worst outcome means you will get 25,000, the lowest in the first year, and 12,000 in the second year. This is the worst combination. Lowest, 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 lowest. Find out the NPV and find out the probability of the occurrence of this NPV. But if suppose your luck is good, you will get 30,000 in first year, highest number, and 30 in the second year. This is best combination. 30 in first year, 30 in second year. And what is the probability of that occurrence? Third question, will the project be accepted? Will the project be accepted means I have to find expected NPV. And if my expected NPV is positive, I will say accept. If the expected NPV is negative, I will say reject. And the discounting factor is given. For year 1 take 0.909, for year 2 0.826. This question seems little complicated, but actually it is very easy. First you write down step 1 decision tree. Dysentery start from left side, start from little below, maybe you keep 20 lines or 15 lines blank, and then you start writing. Today I have two choices: start the project, do not start the project. If I do not start the project, no further discussion, NPV will be 0. But if I start the project, then I have consequences. In year 1, we have two possible outcomes. In year 1, we have two possible outcomes. Either I will get 25,000 or I will get 30,000 with probability 0.4 and 0.6. Up to this you please write down. Both numbers should be on a straight line, one below the other, and it should come below year 1. Year 2, and you need some space here also, okay, I need ½ inch space here also, so don't go to the extreme corner of the page, keep 1 inch blank on the extreme right side of the page. Now year 2, answer depends on what happened in year 1. In year 1, we will get 25,000. In year 2, after getting 25,000, we will get either 12,000 or 16,000 or 22,000 with probability 0.2, 0.3, 0.5. And if I get 30,000 in year 1, if I get 30,000 in year 1, then I will get either 20,000 or 25,000 or 30,000 in second year. Is it right? How many paths are possible? How many paths? How many combinations are possible? Can you guess how many combinations are possible? 1, 2, 3, 4, 5, 6. How many combinations are possible? I have given you 6 options. One of them is right. How many combinations or how many paths are possible? Anybody? 6 paths are possible. 6. See, this is one path. This is one path. Then this can be second path. Then this can be third path. Then this can be fourth path. Then this can be fifth path. And then this can be sixth path. Depending upon what you get in first year and what you get in second year, there are total 6 paths which are possible. Can you see that? If there are 6 paths possible, there will be 6 possible NPV also. There will be 6 possible NPV. If you get 25,000 in year 1 and 12,000 in year 2, this combination will give 1 NPV. If you get 25 in first year and 16 in the second year, this combination will give you second NPV. Likewise, we will have total 6 possible NPVs. We will have 6 possible NPVs, but each NPV will have a probability. So what will be the probability of the first path? What is the probability of the first path? The probability of the first path means getting 25,000 in the first year and getting 12,000 in the second year, which means it's like asking a statistical question. What is the probability of getting 25,000 in year 1 and 12,000 in year 2? Which means I am asking you a joint probability question, and in a joint probability question you have to multiply the two independent probability. 0.4 into 0.2. Very good answer, Papat. 0.4 into 0.2 is right. 0.4 into 0.2. So joint probability, write down. Joint probability means probability of getting 25,000 in year 1 and 12,000 in year 2. Multiply 0.4 into 0.2 and just write down next to this number 0.08. You are right, 0.08 was right. Now similarly, what is the probability of getting 25,000 in year 1 and 16,000 in year 2? You will multiply 0.4 into 0.3. 0.4 into 0.3 is 0.12. Very good. Come on, next. 0.4 into 0.5, 0.20. Just write down next to this number. This should be written very on the same line so that one can understand the probability. Then 0.6 into 0.4, 24, 0.24. 0.6 into 0.5, 0.3. Very good. 0.6 into 0.1, 0.06. For a cross check, the total of all the probabilities should be equal to 1. Just cross check. Total of all probabilities will be equal to 1. Is it 1? Anybody who can certify? Is the answer of joint probability 1? Yes. Now understand, we have to make a decision between start and do not start the project. If I do not start, the NPV is 0. If I start the project, what will be my expected NPV? So I have 6 possible NPV. With these probabilities, I will compute expected NPV. If expected NPV is positive, I will say start the project, because then this is higher. If expected NPV is negative, I will take a decision do not start the project, because that is higher. So I need to find out expected NPV. I have total 6 paths, 6 combinations, 6 possible NPVs. So there are different ways you can solve it. One is you can solve by preparing 6 different tables. Okay. Second, in one table only we'll get all the 6 answers and then multiply by probability. I think this is going to be faster, easier to understand. So we'll follow one table format only. In some books they have prepared different tables for the same question. That is also okay. I don't claim that this is the only right answer. Finally, it is a mathematical subject, and if you get same answer by different format, you are welcome. So we'll draw a total of 9 columns. Take a pencil, pen, calculator, scale and draw. First column, write year. Under year, 2 columns, cash flow, present value. Under present value, write down the factor of year 1, 0.909. 0.909 is the factor of year 1. Year 2, 2 columns, cash flow, present value, second year factor is 0.826. Then write down total PV of cash flow, total present value of cash flows. Then write cost of project, then write down NPV, then write down NPV, then write down NPV and then write down joint probabilities. There will be 6 different NPVs depending upon the combination of year 1 and year 2. Joint probability we have computed. NPV multiplied by joint probability will give you expected NPV. So first you draw this table and write down column numbers also. These are column numbers. Column number 1, 2, 3, 4, 5. 5 will be 2 plus 4. PV of cash flow of the first year and PV of cash flow of the second year. Column number 6, 7 is NPV. Column number 5 you will take minus 6. Then column number 8, joint probability. Column number 9, 7 into 8, NPV into joint probability. Column numbers will help you to understand later when you are revising. If you want to write, write. If you don't want to write, then also write. Who will give you the choice? If given a choice, you will not write. Okay, so now my number crunching will start. Year 1, cash flow is 25,000. Cash flow is 25,000. One possible cash flow is 25,000. Multiply by 0.909. You will get a present value 22725. Keep 3 lines blank. Keep 3 lines blank and write 30,000 into 0.909. 27270. This is my first year. Either I will get 25,000 or I'll get 30,000. If I get 25,000 in the first year, I will get 12 or 16 or 22 in the second year. If I get 30,000 in the first year, I'll get 20, 25 or 30,000 in the second year. Is this understandable? Is this understandable? Now what you do, shortcut to calculate present value. First you type 0.826 into 12,000 equal to 9912. Now just type 16,000 equal to 13216. Type 22,000 equal to 18172. 20,000 equal to 20,000 equal to 25,000 equal to 30,000 equal to. This is the present value of year 2 cash flow, depending upon whether you get 12,000 or 16,000 or 22,000 or 20, 25, 30. Any query up to this? Anybody any query on this till now? No query. This is my year 1 cash flow. This is my year 2 cash flow, present value terms. So if this combination happens, my present value will be total of 22,725 and 9912, 32,637. But it is possible in year 1 you get 25,000 and in year 2 you get 16. So present value will be 13216. Please add 22,725 plus 13216. This combination suppose takes place, this and this 35941. Now the third combination is 22725 plus 18172. Please reply. 40897. Depending upon cash flow of year 1 and year 2. Now same thing, in second year you will get 27270. First year, sorry. Second year you can get this number or this or this. So first you add these two. 43790. Now you add 27270 and 20650. 47920. Now you add this number and this last one, 24780, 52050. These are the 6 possible PV of cash inflows. Depending upon which path you take, accordingly your PV will change. Cost of the project is same, 40,000 each. Cost of the project is same. Now NPV will be difference between these two columns. Please write down yourself. 32,637 minus 40,000. 7363. Negative. 4059 negative. Without calculator try. 897. 3790. 7920. 12050. Can you see that? Wait, up to this is right? Up to this is right? Yes or no? Yes. Now we'll go to joint probability. copy from the decision tree where we have drawn decision tree. On the right side we have written joint probability. On the right side we have written joint probability. So you also write it down. And now my question is, what is expected NPV? Now you have to use memory plus and memory minus function. This into this equal to memory minus, because it is negative, write the number. This into this equal to memory minus 487. Remaining will be memory plus 897 into 0.20 equal to memory plus 179. 3790 into 0.24 equal to memory plus 910. 7920 into 0.3 equal to memory plus 2376. 12050 into 0.06 equal to 723. Is it right? Now my total is memory recall. Please confirm. Memory recall and check the total. Is it matching with 3112? Anybody? 3112. 3112. Yes. So one student has confirmed. One question is whether project should be accepted. If you accept the project, expected NPV is positive. If you do not accept the project, NPV will be 0. So I will accept the project. Write down point number 1 below. The project should be accepted. The company should accept the proposal. The company should accept the proposal as the NPV is positive. The company should accept the proposal as the NPV is positive. Then there was a question. That what will be the worst NPV? What will be the worst NPV? And what is the probability of that? Worst NPV would be this number. Suppose you get 25,000 in first year and 12,000 in the second year, you will end up getting an NPV of 7363. But the probability of getting that NPV is 0.08. So write down the worst NPV is minus 7363 with a probability of 0.08. With a probability of 0.08. And suppose your luck is good, you get 30 in the first year and 30 in the second year, you will end up getting an NPV of 12,050. This combination will give you 12,050 NPV, but the probability of getting this is 0.06. So write down the best NPV will be 12,050 with a probability of 0.06. With a probability of that means you will go to sixth number path. What is the chance? The chance is only 0.06, 6% only. There is only 6% chance that you will have best cash flow in year 1 and best cash flow in the year 2. So this is my answer for this wonderful question. Any query now? Any query on this question? This question was asked for about 14 marks. Now they will ask you for 8 to 10 marks. Next question number 53. Write down homework. Question 53 homework. Same question. Can you just read below? Can you read the question and you will find they have, I think, doubled all the numbers. All numbers they have multiplied by 2. See the creativity of your great institute. All numbers in question number 53 is double of the previous answer. What more do I explain? So you will solve it as homework. Keep 2 pages blank. Keep 2 pages blank. Now we'll go to question number 54. Okay. So should we take it today or tomorrow? Please confirm. Today or tomorrow? If you have time, I can take it today also. Okay. So the students are requesting to take today. Okay. So let us take question number 54. Krishna is facing water crisis in Chennai. He is considering drilling a well within his compound. In the past, only 70% of the wells drilled showed adequate water at 200 feet of depth. So you have two options: to drill or not to drill. Okay, that is my choice I have to make. If you drill, then you will get water whose probability is 0.7. If you drill up to 200 feet, you will get water. You will get water, but there is a 30% chance you will not get water. If you don't get water, on finding no water at 200 feet depth, first you drill 200 feet and you may get water with 0.7 probability, you may not get water with 0.3 probability. If you do not get water, you have to make a choice. What is the choice? Do not drill further 50 feet, or you can say drill further 50 feet, drill further, and do not drill. You have a choice here. If you drill further 50 feet, again there are two possibilities. You may get water and you may not get water. You will get water has only 0.2 probability, which means you may not get water after drilling further has 0.8 probability. Okay. So once you understand the question, you can understand the answer. That is how mathematics work. Today I have to decide whether to drill 200 feet or do not drill. If I drill 200 feet, I'll get water whose chance is 0.7. If I don't get water, the probability is 0.3. Once I get water, my job ends here. But if I don't get water, I have to decide drill further or do not drill further. If I drill further, again I will get water has 0.2 probability and I will not get water has 0.8 probability. Is it right? The prevailing cost of drilling is 50 per feet. If you drill, you have to pay 50 rupees per feet. So if I drill 200 feet and if I get water, my cost will be 50 into 200 feet. My cost will be 50 into 200 feet. But if I do not drill, then I have to purchase water from the market and pay 15,000. If I do not get water, but I drill further, and if I get water, my cost will be 250 feet into 50. If I do not get water and do not drill further also, my cost will be 15,000 I have to pay to the market, and 10,000 is the drilling cost of 200 feet. And my bad luck, I don't get water, I drill further and still I don't get water. I have to purchase water from the market for 15,000 and I have incurred 50 rupees per feet on drilling. So these are my cost at different level. So what do? I will have to evaluate this from right to left and reach the decision. So this is suppose D1, this is C1, this is D2, this is C2. So evaluation will be done from right to left. This time the objective is cost minimization. This time the objective is cost minimization. So I will choose that decision which will minimize my cost. Is it right? So write down step 1 decision tree. Very easy question. Very easy question. Just read the problem, keep question in front of you and look at the answer. We have two choices to be made today. Either you dig well 200 feet or you purchase water. These are the two alternatives today in front of me. If I dig the well for 200 feet, there are two possibilities. There are two possibilities. I will not get water, 0.3 probability. I will get water, 0.7 probability. If I get water, my cost will be 200 into 50, 10,000. 200 into 50, 10,000. If I do not get water, I have to take a decision. The decision I have to take, should I dig further or do not dig further? Should I dig further 50 feet? Should I dig further 50 feet or do not dig further? If I decide not to dig further, I will purchase water from the market for 15,000 and I have also incurred the digging cost of 10,000. So my total cost will become 25,000. But if I dig further, there are two possibilities. Either I may get water with 0.2 probability or I do not get water with 0.8 probability. If I get water after digging further 50 feet, my total cost will be 250 feet into 50 rupees, 12,500 will be my total cost. But my bad luck, if I do not get water even after drilling further 50 feet, I have already incurred 12,500 rupees in digging, plus I have to purchase water from the market at 15,000. So my total cost will be 27,500. My total cost will be 27,500. Is it right now? Is this right? Please say yes or no. Yes. So this is my diagram. Any query on the diagram? Any query on the diagram? No query? So my evaluation will be from right to left. First I will value C2, which is a chance node, which will be values multiplied by probability. Then I will value D2, which is a decision node. My objective is to minimize the cost. My objective will be to minimize the cost. Then I will value C1, which is again a chance node. I will compute expected value 0.3 into D2 plus 0.7 into 10,000. And then I will value D1. My objective is minimization of cost, which will be lower of 15,000 and the value of this C1. Not very difficult, just think about it. I'll give you 5 seconds to think. Is it right? Write down below the diagram, write down step 2 evaluation. Step 2 evaluation. Continuously look at the diagram. If it is chance node, multiply by probability and their values. Multiply probabilities with their values. C2 equal to 0.2 into 12,500 plus 27,500 into 0.8. So that comes to 24,500. below that we have D2, before that we have D2. We are moving from right to left. So the previous box is D2. D2 is a decision node. Objective is cost minimization, lower of the two. So there are two branches. One is giving you a value of 24,500 and the other branch is giving you a value of 25,000. So you will choose lower of the two. Why lower? Cost minimization. D2 is emerging from C1. D2 is emerging from C1. Expected value of C1. C1 is a chance node. C1 is a chance node. So there are two branches, one with probability 0.3, one with probability 0.7. The one with probability 0.3 goes to D1, which gives you 24,500, and one with probability 0.7 goes towards 10,000. So my expected value is 14,350. My expected value is 14,350. Diagram should be continuously in front of you. And then expected value of D1. D1 is the decision box. There are two branches, one going towards 15,000 and one going below towards 14,350. Cost minimization is the objective. You will write lower of 15,000 or 14,350. 14,350 is the answer. 14,350 is the value of dig 200 feet and 24,500 was the value of dig further 50 feet. So my decision will be first I will dig 200 feet. If I do not get water, I will dig further 50 feet. First I will dig 200 feet. If I don't get water, then my second decision will be to dig further 50 feet because those two numbers give me lowest value. So I have to write a conclusion also. Without conclusion, don't come home. Write down decision. Decision tree problem cannot be completed without decision. Right, please. Krishna should dig the well. Krishna should dig the well, and on not getting the water, he should dig further 50 feet. And on not getting the water, he should dig further 50 feet. He should dig further 50 feet. Okay. So this is our important question we have solved. Now we'll continue tomorrow. Thank you very much for joining. Those who are attending on YouTube, thank you very much. We will continue tomorrow at the same time, 6:45. It is better to join the live streaming batch and get your doubts cleared. These lectures are on the YouTube. Please watch it every lecture. You can download the notes also. Right now we are running a very important scheme for the benefit of all our CA students. You can purchase our video lecture only for 3,500. The entire syllabus, will get the hard copy of the notes, summary, chart also, and our access to app which will have MCQs also. You can also buy FR products also which have all the study material, and you'll get MCQ app also. MCQ in the book also we are providing, and our syllabus covered is very, very comprehensive. The reason why we are taking comprehensive lecture is that you should be able to feel confident in the exam. When you go to the exam, you should feel that yes, I have learned this chapter, I have done this question, I don't have surprise element. And if you don't have any surprise element in the exam, then only you will be able to score very good marks in the exam. And for that, a detailed coverage is required, good presentation skill is required, and everything you get in the lecture. So please share this video with maximum number of your CA final friends. who are going to appear in May 24, November 24, May 25 exam. It will be really very useful to them. Okay, so thank you very much and see you tomorrow. Bye bye.